Alright, what is up, boys and girls? Welcome back to another video talking about the V-shaped recovery, the strategy that has been making me an absolutely incredible amount of money recently. Over the past 3 or 4 months, I've been trading just this strategy and it's been going incredibly well. My win rate is over 80% with this, and I've got a few break-evens in there as well, so really probably looking like more like 90%. To be honest, I cannot believe how well this has been working, and I just wanted to show you another case for the fact that these setups happen pretty much every single day, to be honest, and the kinds of things that I'm looking for. So make sure to drop a like, subscribe to the channel, put a comment down below. Really helps me out. I'm just going to go through some of the charts and some of the trades that I've been seeing recently over the past few days. This is a strategy that does give you 3 or 4 setups a week, I would say, per pair. And I've been trading this on US 500 and on gold. I've been getting probably like 5 or 10 setups a week, to be honest. So plenty of setups, and they are working really well most of the time as well. So funnily enough, there was one this morning that I took just a few hours ago. If you take a look here, you can see pretty easy stuff. As always, I'll give you a little example of what I'm looking for. So say you've got your market like this. Your market's going up and down and up and down. And then obviously you can see you can find those pivot points in the market where you're looking for your liquidity points, basically. So for example, on this one here, we've obviously got our liquidity. You can see the very obvious swing low of liquidity here, the swing high of liquidity here. And then basically what you're looking for is you're looking for the market to come down and swing below this level of liquidity, sweep the liquidity as it was. And then what you're looking for is you're looking for the market to come back up in this V shape like this. This is the V-shaped recovery. You sweep liquidity, you're looking for a nice reversal from that area. Obviously, because you're in such a big area of discount, there's a good chance that you'll bounce back up. Obviously, the US stock markets are pretty much perma bullish in general, and they always want to deviate back to the upside for the most part. And generally what you need to be looking for is you've got your V shape like this, and then you're looking for a fair value gap of some kind in this leg down here to be inversed. So basically this is your model. You're looking for your V shape and then an inverted fair value gap to be closed above in this area here. Once that happens, you would be looking to enter. You've obviously got your stop loss below. I use a manual stop loss. So basically I only actually have a stop loss if it closes back below here. I don't put one in, because you can get these big swings like this that wick down below, and you don't want to get wicked out before you go to your take profit. But generally speaking, these always generally do work for a 1-to-1. I've been having, if I took just 1-to-1s on this, I'd probably have pretty much 100% win rate with break evens in there as well, just because they move so fast back to the upside in general. And if you get these really good sweeps of liquidity, they do want to reverse back up into this area, which is really cool. So this is the entry model. And then I'd be targeting the first level up here. I'd probably go break even at a 1-to-1 or the first level of liquidity. In this instance that I've drawn here, I'd probably go break even at the 1-to-1. And then I'd leave a runner to the next swing high, and then I'd leave a runner to the high of day, and this would be my model. And then basically sometimes you get a 1-to-1 and then you get stopped out at break even, or sometimes you get the 1-to-1 and then you get the second runner and then you got stopped out at break even. And then sometimes they just do this and they run all the way to high of day after grabbing that liquidity, and you get an absolutely incredible trade. So that's the model. I'm just going to go through and show you a few examples recently. As I was saying, there was one this morning, as you can see down here. This was a pretty good one, to be fair. Didn't run. It's obviously because the markets are closed today in America. I think the stock market's closed, or it's a holiday or something. So obviously the price action is not going to be ideal, but I took this on paper just because I know the holiday's closed, so I didn't want to take it on an actual account. But you can see very clear swing of liquidity here. Very clear liquidity's level right here. You can see this is a very obvious level of liquidity. There's going to be lots of stop losses below this. And you can see this pretty textbook, very nice 1 minute. We come down, we V-shape back up. You can see you could have took this on the first inverse, which would have been here, or you could have took them both if you want to be more safe. But either way, you probably would have won on this, as you can see. I took the first one because I was pretty confident that once we inverse this with this much momentum back to the upside, you can see this was the fair value gap here. I knew that once we closed here, we were probably at least going to go to this high. And that's pretty much exactly what happened. You can see my stop loss would have been below here. My take profit, my first take profit was at this high here. My second take profit was at this high. Once you get to here, you're unsure whether or not you're going to break. And then I got stopped out on the rest for break even. I went to break even once I hit my 1-for-1 here. So I took 2 levels of profit and then got hit break even on the final runner, which is fine. But as you can see, this was a good trade. Funnily enough, if I had left the break even off for the runner and just let it play out, I would have made more. And it would have come all the way back up here and continued up, as you can see. Once it retested into this fair value gap area, we did actually bounce and continue, which often happens. But you can see this was a great example of a trade, and this was literally today. Literally today. So as we can see, we'll go across, we'll look at some more. There was a potential for a really, really good one here. I think I did actually take some good trades yesterday as well. Although there was, because we had FOMC, so there was a lot of volatility in the market. But this was a really great example of one here, which I took. You can see the actual executions on my chart here. So I can show you that I'm not lying about taking these trades. You can see the executions on the chart. Obviously, we've trickled all the way down here. This is pre-FOMC, so this is a bit of a risky trade. I wouldn't usually trade before news, but I was pretty confident that this was going to work just because we dropped so much. We've got a nice sweep of liquidity here. We've got a few levels that have been swept out, and it's just the way that we came back up so quickly on the 1 minute here, and you can see pretty much exactly what I did here. You're looking for that V shape. You can see we're coming back up. We're V shaping back up. My entry was once we closed above. I got a little bit of a late entry here because I missed this. I should have entered on this candle, which obviously closed above here, as you can see. But I entered here, so let's be fair. Entered here looking for a 1-to-1. I basically just took profit at this level of liquidity here, as you can see on the chart. Just because I knew we were pre-news and we were about to get very, very volatile. As you can see, we've got some crazy volatility after that, but that was a great trade. There was a few in here that had potential, but I was a bit concerned about the momentum to the downside here, so I didn't take this V-shape, even though, as you can see, we did potentially get a V-shape to the upside here. But when we were in those news conditions where there's a lot of volatility, you can, generally speaking, potentially get wrecked in the market. And also, if you look at the 2 minute, you can see with this huge fair value gap that we never closed above. So it is important to check other time frames when you've got these big moves to the downside. Because obviously on the 1 minute, you could have took the first inverse, but it would have been a loss because we would have closed back below. You can see there was a fair value gap here. Technically, we did close above this. As you can see, we would have closed back below pretty quickly, and that would have been a loss. It would have actually worked out if you would have just held it. As you can see, you don't want to be holding in drawdown. So obviously, these are a few of the trades I've taken recently. What else have I taken recently? I'm sure there'll be some more executions on this chart somewhere. I'm sure this 5 minute here. Yeah, this is a trade that could have potentially taken, although a bit of a sketchy execution. This took a little bit of a while to come back around. Let me have a look. Where has this gone? Here it is. You can see we did have this huge fair value gap here, but it was a bit of a sketchy time at night when there's not much volatility. This obviously would have worked, as you can see. I don't tend to like to take these V-shapes if they V-shape all the way back up before I get the entry, just because generally speaking, you could just reverse pretty much at your entry point here and go back down. You want to be catching these V-shapes when they're coming back up, so you've got room to run back up into these targets, which generally do get hit. You can see we did come up and fully hit this full V-shape on this area here. There's loads of these recently, though. I think I did take a few break-even trades in this area here. This was just basically trading during the low volatility hours, low volume hours, which I probably shouldn't have done. But you can see, if you look across the market, you can see all over the place, all these V-shapes in the market that all do tend to recover back to the upside that look really good. There's a really decent one here as well. Let me just see if there was an entry on this one. This is on the 5 minute. You can see this is quite a very long series of fair value gaps here. Let me just circle this and see if there's an entry on the 1 minute that I could have taken. And then I'll wrap the video up because I don't want this to be too long. Yeah, so look, this is an absolutely perfect trade here. Got this big area of consolidation. Obviously, had this big drop to the downside previously. We started to consolidate. We're going up and down. We're forming some good areas of liquidity where people are thinking, okay, you can see this is a good area here. You've got a good area of liquidity up here as well. You can see we're going sideways for a good while. Let me get rid of my 5 minute fair value gap there. We obviously come down. We've got this lovely sweep here, and you can see the V shape of this. Look at the momentum back to the upside, how good this was. You've got a really nice, clean fair value gap. As you can see, we're coming back up. Probably, I would have entered here. My stop loss below. Aiming for a 1-to-1. You can see with this whole V shape as well, we're catching this on the way back up. We're not catching this up here. So we've still got room to run back into the recovery after sweeping the liquidity. You can see if you entered here, it would have been about 10 minutes of going sideways. We go up for the 1-to-1, and then I would have gone break even here just because I wouldn't have known if we were going to come up, hit these liquidity targets, come back down. So I would have gone break even, but as you can see, the 1R was hit here. I can actually draw a straight line. And then the runners would have held a runner to here, and then I would have held a runner to this local swing high, which would have eventually got hit. There you go. So that would have been a perfect trade. 1R here, 2R here, and then 3R at the runner. I would have been break even as well. So once I hit this 1R here, I would have been completely out of risk. You can see this was absolutely perfect trade, perfect trade. And these honestly happen all the time, guys. Really good strategy that's been doing so well for me recently. And I've gone and back tested this for a number of years, and they always seem to happen. The US 500 or NASDAQ or any of those indexes related to the US stock market do all seem to have this property to them, where they always want to have these big swings of liquidity and then recover. So really interesting times. Very excited to see what happens next. I hope you enjoyed this video. Please do drop a like and subscribe if you're still watching. Thank you very much. Leave a comment down below. Let me know what you think, and I'll catch you in the next video. Cheers.